Erratic monsoons and extended dry spells immediately lower baseline agricultural yields. When rainfall drops, crops simply stop growing. A single severe climate shock destroys productive assets and wipes out a family's entire livelihood in a matter of months. In response to this constant volatility, farmers naturally adopt defensive strategies. They plant low-yielding subsistence crops that require less upkeep, and they stop spending money on fertilizers or new technology. Avoiding risk means avoiding investment. Without capital or improved practices, the land continuously degrades, keeping these populations locked in poverty. To reverse this degradation and build climate resilience, farms need to adopt conservation agriculture. This biological approach relies on three physical pillars: minimal soil disturbance through no-till planting, maintaining permanent soil cover, and rotating diverse crops. These practices physically protect the structure of the earth. The undisturbed ground maintains stable aggregates, allowing the soil to sponge up and retain moisture long after the rain stops. This table shows the effects of implementing different conservation agriculture practices on soil organic carbon. Looking at the bottom row, when a farm successfully integrates all three principles simultaneously, soil organic carbon levels increase by 32.1%. The science works. But transitioning to no-till requires buying specialized equipment and new seed varieties. For a vulnerable farmer, taking on that upfront cost is mathematically impossible when a single drought could destroy the entire investment. Traditional agricultural coverage, known as indemnity insurance, requires an adjuster to physically measure crop damage on a specific farm before a claim is paid out. Deploying agents to thousands of tiny, geographically isolated farms creates administrative costs that vastly outpace the value of the policies themselves. It also creates a structural problem called moral hazard. If a payout is only triggered by crop failure, the system accidentally incentivizes farmers to let struggling crops die rather than trying to save them. Because of these extreme logistical costs and behavioral flaws, traditional insurers simply bypass smallholders in developing nations, leaving them completely exposed to macro shocks. Index insurance solves the logistical bottleneck by bypassing the farm-level damage assessment entirely. Actuaries build a regional index using automated data, pulling in satellite rainfall estimates and readings from local weather stations. If that regional data drops below a pre-specified threshold, the system instantly generates a payout for everyone holding a policy in that zone. Nobody has to visit the farm. And because the payout is tied to objective regional weather data instead of personal crop failure, moral hazard is eliminated. Farmers are still motivated to harvest whatever they can. Abstracting the risk to objective data creates a rapid, transparent safety net that easily scales to the world's most remote areas. For the farmer, this automated safety net establishes a guaranteed financial baseline. Even if the rains fail, they are protected from total ruin. That mathematical security changes how local banks and microfinance institutions view the farmer's risk profile. Institutions take advantage of this through bundling, attaching the index insurance policy directly to agricultural credit loans. The farmer now has access to the immediate capital required to upgrade their farm, bridging the exact financial gap that prevented the adoption of conservation agriculture in the first place. With credit secured, farmers buy cover crop seeds and the specialized planters needed to operate without tilling the earth. The transition begins. Seedlings push through thick, protective layers of dry mulch, establishing deep root systems in undisturbed soil. As the soil organic carbon rises year after year, the earth naturally absorbs and stores more water. The farm builds its own physical buffer against future droughts. Index insurance is a financial mechanism, but by removing the constant threat of total ruin, it provides the capital required to heal the soil and secure long-term climate resilience.